In this video, we're going to look at internal service fund transactions and financial reporting statements. So we have a city that has created an information technology fund. This internal service fund has been operating for 4 years, and the goal was to reduce cost, avoid duplication of efforts, and to make sure that we're providing the best technology to all of the city's operations. The fund is designed to be self-supporting. So we have the pre-closing trial balance for IT as of the last year, and then the current year ended December 31st. The following transactions occurred. So we're going to record these 12 transactions, and then we're going to look at the 3 financial statements. So the newer financial statement that we haven't seen before for a governmental entity is that statement of cash flows for an internal service fund. So let's look at each one of these transactions one at a time. So transaction 1, gross employees' wages were $57,600, including the employer's share of Social Security taxes amounting to $4,100. We had federal income and Social Security taxes withheld that totaled $18,725. So we're just looking at the journal of the Internal Service Fund. So we have our debits and our credits. And then I'm just going to format this as dollars. So we have wage expense. That totaled $53,500. Payroll tax expense of $4,100. And we paid cash for payroll. And we paid taxes to the federal government. We're going to remit payroll taxes to the federal government. Okay, transaction 2, office expenses in the amount of $3,700 were paid in cash. Transaction 3, we had a bill totaling $14,525 was received for utilities provided. So we used utilities from the state, from the government, and we are going to pay them. Oh, no, number 3 is materials and supplies purchased on account. Of $8,400, and that was on accounts payable. Now our utility expense of $14,525. Because we received that from another government entity, it is due to other funds instead of cash or accounts payable. I know there's a more elegant, faster way to do that, but okay. So on 5, cash paid to the federal government for payroll taxes was $23,000. So we're going to pay that amount due to the federal government. Okay, Next, we're paying cash to the utility fund. But we paid $14,500 instead of the full amount that we recorded. Then we paid our materials and supplies used during the year. We also have accounts payable at year end and materials and supplies. So first we're going to show that we paid accounts payable, and the amount that we paid was $8,000, and I'll tell you in a moment why I know we paid $8,000. Okay, so we had accounts payable of $2,550. We then recorded an additional accounts payable of $8,400. This tells us that at the end of the year, we have accounts payable of $2,950. So if we take $2,550 plus $8,400 minus $2,950, it would show that we paid $8,000 in accounts payable. Next, we have the materials and supplies used during the year. So we have cost of materials and supplies used, $8,250, and then we need to remove those materials and supplies from our materials and supplies inventory. Transaction 9 says charges to departments during the year. We had general fund $57,000 and a special revenue fund of $20,600. So this is money we're going to receive from other funds because we billed them for services. Next, we receive cash. So we have unpaid balances at the year end of the general fund, $3,500, and special revenues fund, $1,800. So we received the remaining in cash. And so we are going to record that we received cash. And that was due from other funds. Then we had depreciation for the year of $6,100. So we had depreciation expense. And allowance for depreciation. And then we have our closing entries. So we close our revenue and expense accounts. So we're going to close billings to departments, which is one of our revenue accounts, and excess of cost over net billings to departments. And that number is a plug to make debits equal credits. So if we put in all of our expenses, okay, we're then going to do our net position unrestricted, and excess of cost over net billings. And then we have our net position in capital assets. For our depreciation expense. Okay, and that is the end of the closing entries. So I'm just going to, for formatting purposes, next, we are going to make a statement of revenues, expenses, and changes in net position. So, statement of revenues, expenses, and changes in fund net position. Okay, so we have our billings to departments, which is our revenue of $78,100. Then our operating expenses, which I am going to copy and paste from here. For just being faster, total operating expenses, pulling our sum, giving us an operating loss of that $12,000. $75. Then we have our net position on January 1 from our trial balance. Of these two added together. And our net position December 31. Giving us, okay, our next is the statement of net position and then the statement of cash flows. And I'm just going to go ahead and put these on this video. So statement of net position. So we have cash due from other funds, which is the equivalent to accounts receivable. And then we have our materials and supplies inventory. We have cash of $7,575, due from other funds of $5,300, and materials and supplies inventory of $500. So our total current assets equal the sum of those, or $13,375. Then we have our capital assets, machinery and equipment, less allowance. Okay. If we looked above, we would see that our machinery and equipment balance is $53,600, and then we would take the total accumulated depreciation plus the $6,100 that we added this period from the trial balance. This gives us total capital assets of $17,400, and then we have total assets of $30,775. We then have our liabilities, which are accounts payable, what we owe to the federal government for taxes, and what is due to other funds, which is like the remaining of that utilities bill. So our accounts payable is $2,950, due to the federal government $2,475, and due to other funds $1,250. Our total current liabilities are $6,650. The last that we have then is our net position. And we have the net position, net investment in capital assets, and net position unrestricted. Okay, so we have $17,400 in capital assets and $6,725 in unrestricted. Okay, which is our total net position. Okay, our last statement is that statement of cash flows. Okay, so we are going to create a statement of cash flows, starting with cash flows from operating activities. We have cash received from customers, and then we have cash paid to employees, the federal government, suppliers, and other departments, I'm going to make all of those negative for formatting. We're going to total these. And that gives us our net cash provided by operations. Okay, which is negative 6,925. So we have our net decrease in cash and cash equivalents. Then we had our cash and cash equivalents on January 1, which was 14,500, and then the cash and cash equivalents on December 31. Which is $7,575. Okay. And then we would have the reconciliation of operating income to net cash. So we had an operating loss of negative $12,075, and then we have our adjustments to income. So we would add back depreciation expense, and we have an increase in inventory of $150, an increase in receivables of $1,050, an increase in accounts payable of $400, a decrease in due to federal government of $175, and an increase in due to other funds of $25. So we will add all these together, and that gives us our net cash provided by operating activities. So you can see that we have both forms then, the direct and indirect shown here. Okay. So question 3, then the last question here asks, given the goals of the fund as described above, evaluate the manager of the IT department. So what we know is our pricing policy is not covering all operating expenses, including depreciation. We have a net loss of the year, which equals 15.5% of billings to department. So we need to look very carefully at what costs we have for the year and what our billings are, and we need to either significantly reduce our costs or increase our billings, or a combination of the two, in order to make sure that this department is at the very least covering all of its costs.